Good morning, everybody. Thanks so much for tuning in. At the outset, please mask up. The country needs you to mask up. We will get to the India news in a bit. Mind you, it's not just in India. There is action happening on the side markets the world over. I just want to start with that while we are all looking at what's happening to equities, there is also a parallel market on the cryptocurrency side. There is a parallel market on the SPAC side, all of which are giving way on the world side as well. So Bitcoin really took a big retreat over the last few sessions, has come back a little bit, but has come off quite rapidly. So that is part one. SPACs, and there's this wonderful story on BloombergQuint website which speaks about one particular guy, Chamat Pahilapithia, but that notwithstanding, there is a wipeout that is happening in SPACs. And for all of you who don't know, try and read more about this article on the BloombergQuint site. But SPACs world over are seeing a bit of a pullback, really. And that's the other thing, right? I don't know whether this is specific instances or safe haven moves or what have you, but a lot of asset classes are now starting to get disrupted. So keep that in mind. SPACs, of course, are listed in the market. So in effect, some of them are listed entities which are coming off, but some of the private, just telling you that SPACs as entities are really coming off. Now, the dichotomy in equities is that the world doesn't seem to be doing all that poorly. So US markets had an okay session in Friday. And individually, the Nasdaq did okay. Maybe the Dow did not. S&P was okay. So those markets didn't have a rubbish day, to be honest. Look at the Asian screen today, for example, and it's not buckling under pressure, if you will. There are some select pockets which are down, select pockets which are in the green. So there is a mixed show of sorts out there. But then you shift your focus on the SGX Nifty, and there is this half an hour ago when I checked, there's a 197 point dip, currently to about 178 point dip on the SGX Nifty, and you wonder, and you don't wonder really, we know the reasons why this is happening. Now, sporadic lockdowns are appearing across states in the country. Previously, if it was Maharashtra, it is now not restricted to Maharashtra. It's happening across the world, across the country, I mean. And cases are rising. We've had fairly large cases. We are nearing another 3 lakh mark. And it seems to be a bad repeat of last year, just that we don't have lockdowns in place, and therefore the spread is that much more contagious. I'm not propagating a lockdown, by the way. Keep that in mind. The economic costs are far too high. But all I'm saying is that this is really getting worrying now. We all need to do our part out here in order to ensure that both the markets and the health stay afoot. So for now, the Indian equity markets this morning seem to be caught in the eye of the storm. Whether this will last, whether this will be contained, I don't think anybody knows. We'll try and do a conversation today at 9:30, for example, with Vikas Khemani of Carnelian on this very subject, that whether this will be contained or whether this will last. But frankly, as much as I would love to ask him and ask a lot of other experts, I don't think too many people have the right answer, really. We will still do our bit. We'll still ask. We'll still give you all the content. But let's wait and watch. So the SGX Nifty is, of course, indicated what's going to happen to the markets. We're going to start off low. You can argue we'll start off 1% lower. SGX is not the right indicator, so on and so forth. But there is issue at hand. Now, what is the trade setup there for? There is this chart which Dr. C.K. Narayan has given, which speaks about how the trends show that on various Ichimoku indicators, we might be reaching some bits of supports as well, but don't quite know if these will last. Or maybe they'll last and maybe they'll bounce back. So it's a very difficult call for all of us to make. But there are some telltale signs, right? Last week, when the fears were not as pronounced, the broader markets, which were expected to outperform the Nifty in 2021, really underperformed the benchmarks. They ended with losses of 2.7 to 2.9%. So there are causes of concern. We always say that the market knows best, and I think you should leave it to the market to know this best. But yes, there are some concerns, and they will be kind of given out today. Now, I repeat, viewers, I really have no clue about whether this will last for a day, a week, or longer. But we do know that trade bodies are calling for strict lockdowns for 10 days. So if all of those happen, they disrupt the mood, and you have to bear that in mind. I think HDFC Bank's earnings reaction today could well decide Nifty Bank's fate today. And while brokerages largely have been benign, you don't quite know if that is what will happen, because HDFC Bank is at 1435 and not at 1375 from where it retraced. So it'll be interesting to see what happens to that one. It could well determine what happens to Nifty Bank today. There are a few earnings. There is ACC, ICICI Prudential, HCL Technologies from the index, M&M Finance. All of these come out this week. I think ACC comes out today. So interesting set of numbers. Some more on the broader markets as well, which could well react to how the commentary will be from each of these companies. But the larger trend may not necessarily support strong earnings. And which is why, while I'm bringing you a bunch of earnings that could react today, keep in mind that the overarching force of the markets could weigh in on all of these. So HDFC Bank is the first one, right? You look at the numbers, NII was at 17,120 versus estimates of 16,408. The net profit was at 8186 crores. I think the numbers, 8186 crores versus estimates of 8436. Sorry, I got a bit confused there. But yeah, so it's lower than estimates. Now, keep in mind, it's lower than estimates because it made additional provisions of 1,300 crores, resulting in the PAT miss. There was a higher provision number than what was anticipated. Now, you have to bear in mind that HDFC Bank is a very conservative bank, and if it's making these provisions, it's providing for what could come up in FY22. And people would probably laud this move that they're already providing for, and yet the miss is not too high. The valuations are in favor, and therefore there is no reason to cut an HDFC Bank. It looks poised for more gains. Maybe it'll depend on the economic activity. But I think this move of providing for additional provisions right at the start of the year is probably great news, right? If it's useful, or if there are losses, then they are provided for. If there are not losses, they could be written back. So therefore, it's very, very prudent move from HDFC Bank. I think the asset quality outcomes were very, very strong. Contingent providers provide P&L cushion for FY22. So all of that is great news. CLSA came out with the note. They maintained a buy on HDFC Bank with a price target of 1825 based on 3.5 times FY23 book. They are, of course, it's trading below the long-term averages according to CLSA and according to everybody, of course. They say that there is limited visibility on lifting of the RBI ban, which is a near-term constraint on multiples. So, viewers, this is the thesis on HDFC Bank, right? They are provided for, they are very prudent, all of that is great. RBI has not cleared them for credit card business, and therefore that caps the multiples, which is why the multiples are below long-term averages. Once the RBI ban opens up, the multiples move up to average. And once the economic growth comes back, which hopefully will some point of time in FY22, the multiples move even higher. Now, can you wait for the multiples to move to those levels? And until then, can you ride the storm? If you can, HDFC Bank has ticked all the right boxes. So therefore, maybe not a time for leverage positions, but cash positions, sure. It's trading below average multiples. And for the best bank in the country, arguably one of the best banks in the country, it normally reverses to mean. So you have to keep that in mind. Mindtree is the other one that came out post-market hours. Q4 numbers, revenues were up 5.2%, estimates for 4% growth. Operating margins were down 103 basis points to 18.6% versus estimates of about 18.1. So even on that front, they did okay. They saw traction across three verticals, except for BFSI, which actually saw a contraction of 1.3%. So that is a bit of a sore spot, but the guidance is interesting. They expect revenue momentum to continue. They see strong double-digit growth in FY22, and they guide to EBITDA margins to sustain over 20% in FY22. So all in all, not bad. We'll speak to the management tomorrow. You'll be able to hear them on Talking Point, talking about the long-term vision for Mindtree. So you might want to hear that. Kolte Patil is the other one. Collections in the March ended quarter were about 16.8%, which is not bad. Sales volume was up 27%, the YOY at 0.85 million square feet, and value was about 42% YOY at 511 crores. So I think they did reasonably okay. Kolte Patil could be an interesting stock to focus on in the session today. Glenmark is the other one, the wholly owned subsidiary. Glenmark Life Sciences filed a DRHP, and the issue comprises of a fresh issue of 1,160 crores. Brokerages are largely bullish on this one. If you are trading Glenmark, though, you should keep in mind that the stock has moved from nearly 480 to 580 rupees in a matter of 4 or 5 trading sessions, actually lesser. So if you are an avid watcher of Glenmark, you understand the business and the valuations completely, and if you feel that it's a great time to buy it, sure. If you're just a trader buying on news, be a bit careful and try and study in the next 1 hour before you go out and trade a bet on Glenmark on the basis of this news. A lot of dealing rooms already knew about this development likely to happen. and as a result of which the stock has run up quite a bit. So I'm not saying it will not run up more. It could well run up more. This is a very positive development. But if you're trading purely on the basis of 3 flashes, then this might not be your stock. And lastly, a small cap stock which has come up with some really strong numbers, it could react. It's a very dicey one to figure whether stocks like these react that much positively or no. But the numbers are just very, very robust. These are consolidated numbers for BEPL, the erstwhile Bhansali Engineering Polymers. As you can see, very strong numbers. There is an advantage of a low base. Having said that, still, it's a very strong quarter, and maybe the stock could react positively. If it does, you know why. I'm just laying it out for you. Lastly, just a few stocks which had some very interesting price delivery action. So Dixon was up on Friday's session, 44% delivery. Bajaj Electrical similarly, Astral Poly similarly, Strides Pharma, very strong delivery and price volume action. Hindustan Copper at 150 did really well. So all of these did really well. Bajaj Electricals, I think, got some dues from the UP government, which were long pending, and therefore it helps in cash flows. So all of these have some of the other potential triggers. Dixon got some land, industrial land for development. So all of them have some positive triggers to themselves, to each stock. But be mindful of the fact that there is an issue of lockdowns and reduced economic activity. And when the world at large is not doing that, for India to do that, which means that foreign capital will be choosy about whether to put money into India right now or later on. And that should be something that all of us should keep in mind. Anyways, I wish all of you safe health, more than the markets, which are, of course, very important, which is why all of you tune in. I wish you and your loved ones a lot of good health. Please stay masked up and stay safe. You need it, and the country needs it. Thanks so much for tuning in.